Welcome everybody to another quick hit review video. It is Sunday the 4th of August and I do have 1, 2, 3, 4, 5, 6, 7 currency pairs to take a look at, and I'm hoping this week will be kind of news free. There is a little bit of news out throughout the course of the week. We'll run through that when we do the live webinars, but right now I want to talk through the Aussie dollar CAD, and you can see we've been very bearish here on the Aussie dollar CAD. As we drop down to the time frames though, to the 240, what we do have is, if you just look what price did, we had a move lower here, and then we put in this, well, it was a valid low and tight flag, it broke out, and then we've kind of done the same thing again, a big bearish momentum candle here and sideways movement, and on the 60 we do have another potential breakout pattern. So I'm just going to delete that information off. This is the pole, and it is looking like that. Now because of this wick, it means that we technically held this area, and up here you can see where we've got that double top. Double tops and head and shoulders, if you remember guys, is a sign that we're actually in a channel, and if you have watched the educational material that's on the website, then you'll know that this was a sign that this could be the start of a channel, and this actually for me personally now is going to end up being a triangle. So what I'm going to be waiting for is a bounce back up to this point. You can just make that a bit longer. We do have it in the close of the candles. 1, 2, 3, there was the fourth, and if we can see a move back up to this area, I will be playing for the breakout on the Aussie dollar CAD. Euro yen, let's go and take a look at this one. Euro yen, after that nice 55 pip winner last week, we're still seeing directional movement, and if I put a structure level on right at the low of this major area just here, you can see we've actually had a confirmed break below and close below that level, and if we look left, we could actually see price come down to this level. There are several hundred pips worth of movement that we could see out of this currency pair. If we drop down to the 240, my concern here is that we could see a retracement. So we've had a very directional run, and right here we're starting to see wicks, and we're failing to put in new lows, and we do also have the RSI confirmation here, which is massively oversold at around 6 or 7. So we could see a retracement here. First of all, where could we see that retracement to? Well, this would be the key area for me. It would be a very deep retracement if we were to get it, but this would be a key area if the market came into it where we could look for shorting opportunities. However, on the flip side, this is very bearish, and we could just see a small retracement to some sort of internal structure, and as we drop down to the 60, we maybe just see a retracement up into this this structure area just here. We'll just wait and have to see how price reacts, but we are massively oversold there, and we could see a pullback, so that's something to look out for on the euro yen. We look at the Euro Aussie, we'll start on the higher time frame as usual, which is the dailies, and we have a at market cipher pattern here. So originally we were looking for a head and shoulders like this, okay, and what we did though is we failed to come any lower, and now we've seen a pullback violating this level of structure just here. Now actually gives us a valid cipher pattern, X to A to B, B to C, CD completion. Now I don't actually trade these, but what I will be waiting for is for the market to go higher, and we would highlight the wicks. Now here there are actually no wicks, so we would be looking for a valid double top that just comes in, taps that area and holds it, and that should provide us a very nice reward to risk if we do get a rotation pattern up in that point. I got that cipher pattern a bit too deep just there. If you're looking for an entry into this now, well, it's at market, and the market is giving you signs here of indecision. So we've had a big bullish run, a pullback, a big bullish run, indecision. The RSI did, no it didn't, sorry, I thought it went overbought, and you probably got some fib confluence up there from our swing high to swing low. You might have a 127, yep, maybe a 1618 inversion. However, I actually need this to come into structure before I can look at shorting the market, so I'm going to be waiting for another push higher. Let's just go and take a look at the 60. Not too much on the 60. You got a lovely bullish run here. You had a small breakout pattern which personally was not valid for me. You've seen another move higher. Looks as though now you're putting in a double top. Is it a valid double top? Well, you need the RSI confirmation and you need it to come into structure. It has come into structure just here. Is it at the top or the bottom of structure though? No, we've got inside structure here. So if you want to be a little bit conservative here, you're best off waiting for a break below, close below, a pullback for a 26.18 and then a short. And what does that give you? Well, it gives you a head and shoulders with a double top and a 26.18 entry. So that will mean you'll have something like, well, your risk is going to be a bit more than I would have liked on this trade. Maybe something like that. And your targets, because this is a fibs based pattern, you're going to be playing for that 382. And your targets are going to be down at this point. So maybe just a 1-to-1, but could be a high probability trade if that double top ends up being confirmed. Euro New Zealand. Euro New Zealand I think was very similar to the Euro Aussie. Yes, we have this head and shoulders. We also had the AB equals CD pattern, which played out really well. And what price is doing right now is we're within the wicks at this upper structure level. So if you believe that this head and shoulders can still turn and come lower, then you're going to be looking for a rotation pattern within this highlighted area. If you drop down to the 240, price is moving quite nicely. You had a lovely bullish run, a pullback and another bullish run. Here on the RSI, you've gone overbought. We'll wait and see if there's divergence for the second test, but you're going to be looking for a double top in this area. And you can either enter aggressively, wait for a confirmed break below, close below, a pullback for a 26.18 and a short. Maybe play for an AB equals CD pattern and then maybe for an extension for a retest of the lows, also giving you a head and shoulders going into next week. Last couple of currency pairs, pound yen. Pound yen, very, very bearish still on the pound yen. And what I do love is that if I put a structure level in just here at that very low, you can see that we do have a confirmed break below, close below. And where could price come to? Well, I actually loaded some more data from my other charts. We could actually, where could it have come to? 1 second while I check my other charts. Where could price have come to? Okay, we'll give it a second just while my other chart is loading. Okay, here we go. Let me just open this up. Okay, we could come down to 125.50s. Okay, 125.50s, which is all the way down to this point. Again, guys, sorry I don't have enough data loaded on this chart, but there is lots and lots of room here for this market to come lower. Let's go to the 240. Take a look at this. Okay, on the 240, a couple of things. First of all, something that stands out to me straight away is we could have a harmonic move playing out here. We haven't quite reached the area that I would expect, which just so happens to come in at 12900 flat. Though look at the RSI and look how price is moving. It's indicating that we're starting to run out of steam. So the RSI went oversold at around 11.5. And instead of seeing this lovely directional movement, right here we're starting to see more candles and failing to put in new lows. So we could start to see the market run out of steam as this harmonic move plays out. Let's go down to the 240. We can be looking for several things here. You can be looking for fib based targets based on the harmonic move. You can be looking for that trend continuation. We will just have to wait and see what the market throws at us. Let's go down to the 60. Not a great deal here, if I'm honest. Not too much here, but we do have that harmonic move going into Monday or Tuesday. Dollar yen is the last currency pair I want to take a look at. Very, very bearish move on this currency pair. Structure level on at the very lows just there, and you can see we have now violated that level. We are within the wicks though, typically, and it's not as high probability, but typically we do come down to retest the very lows of these long wicks, because that's where the bulk of the buying pressure in, but not all the time, so it makes it a lower probability trade. Over on the 240, just look at this big bearish run. That's what we've seen in a lot of the currency pairs. We're seeing new lows, we're seeing big bearish runs. It's made trading difficult because a lot of these runs are as a result of fundamental news, not technical structure trading. So but big bearish candles here. In fact, on the 240, I've just noticed a little bit of caution here. See this big wick? It does mean that technically we do not have a confirmed break below, close below, because of that wick. So something to be a little bit cautious of there. Let's go and take a look at the 60. Here on the 60, not too much. What I do like is this lovely big bearish run here, sideways movement. You may have a breakout pattern on the 15. You may not. Nope, not valid here on the 15. So I would simply just watch, see what happens here. Do we get a retracement? Do we get a continuation? And maybe look for a pullback trade, something like that. So lots and lots of opportunities to look at going into next week. We'll see how many of them play out, and I will see you all within the chat and the next live webinar that is done.